Hey guys, today I want to talk about getting started investing with just as little as $500 and how you can find companies that you believe in and understand to get your portfolio started off right. So we're going to do that by taking a look at my mom's portfolio that I manage for her. Just under 2 months ago, I started this portfolio for her with just as little as $500. I went to her and said, "Hey mom, I know that you are trying to save money, but you're burning cash in your savings account, and I'll talk about how your savings account actually burns your money every single year in another video." But back to my mom's portfolio. I said, "Hey mom, let me get $500 from your savings account. I'll invest it for you in some companies that I understand and believe in." And she said, "Okay, here's $500. Go ahead and put it into something." So I took that $500, found some companies that I understand, that I know, that I believe in, and that I know that are growth stocks, because my goal with this little bit of money is to turn it into something bigger so that she can see, hey, investing actually works. The goal wasn't to earn dividends like other people might suggest that you do. My goal was strictly to turn this $500 into $1,000. So I took that $500, and less than 2 months later, the portfolio is already up 44%. It's looking great. So her returns are at 44% in just under 2 months. Sure, that's a short time, but these are companies that I've actually invested in my own portfolio, and over the last year, I'm up more than 50%. So these companies are going to perform even through the pandemic. I've seen them go down, but come right back up. And most of my portfolio is actually tech companies. So tech companies are doing very well, regardless of the pandemic. They actually are doing better, some of them. Let's take a look at what I invested in for her and talk about how you can get started in the same way. And at the end, I'll give you a link to Robinhood to get your free stock to get started. All you need is a couple dollars. If you have $50, if you have 100, 200, or even 500, put it into the market. It's better than having it sit in your savings account if you don't need it right now. If it's extra money that you can do without, that you don't need for your rent, take it out of your savings account and put it into the stock market, as long as you have an emergency fund set up already to last you 3 to 6 months. If you have some extra cash sitting around, put it in the market, and especially now that we're in a recession, you're going to have a much better chance of succeeding in investing if you get started now. Don't think too much about it, just get started. So let's look at her stocks and talk about it more. So here you can see that I started this portfolio on May 12th. I started it with $500, and then a few weeks later, I think around, I guess here, I added $200 more around here. And it's since gone up. So it started off, it went down. It was down what? What is this? It's down $45 after 6 days. So to the untrained eye, you might think, "Oh my God, I'm losing my money. $45, 6% down already. I gotta get out of this." But don't do that. Stay patient. The markets go up and down, they fluctuate. So be patient and weather the storm. So after that, a few days later, it was back up, right? She was back up 0.04%, but it's still up, right? So it keeps going, it goes back down a little bit, and it comes back up. And uh, what? A month, less than a month later, 2 weeks later, or what is that? 3 weeks later, she's up 7% already. That's 7% is near what the S&P 500 trend. The S&P 500 over the last 100 years has trended upwards anywhere from 8 to 10% on average. So already in less than 3 weeks, her portfolio is doing well at 7%, which is pretty darn good. And it keeps going up 9% 2 days later after that. And then I add a little more money, it jumps up, and it just kept going. As of June 9th, she was up 43%. Then it dropped back down, and down to 22% up, which is $160. So she's still up here, even though there was a huge drop, 22% drop, right, between the 9th and the 11th in 2 days. So again, here you might think, "Oh, I have a lot of money now. I gained $160 already. I should just get out. I gained something. But don't do that. Be patient. Keep putting in more money. So when we were here, we were up already at 20%. So I said, okay, mom, let me get $200 more. She said, okay. After I showed her the graph, of course, I wasn't burning her money, so she said, okay, it looks good. Put in more money. And so I put in more money, and it kept going up. And then it went back down a little bit, and it came back up steadily. So this is how the market works, right? It's gonna go up and down, and eventually you will be up. So here she was up 50%, and then it went back down a little bit. So now it's at 44%. That's how the market works. Be patient and just keep going. Don't worry about timing the market. The market, especially the U.S. market, trends upwards. So yes, we're gonna have recessions every decade. We're in crazy times right now, and there's a pandemic, there's a recession, people are losing their jobs, but the market always rebounds. So of course, past performance is not an indicator of future performance, but when you're assessing risk, you have to look at history and see that we've always come back from downfalls because the US economy is one of the strongest in the world, if not the strongest. So be patient, put in money, and find companies that you use every day. So if you're out there using Snapchat and Facebook and Twitter, and if you love Tesla, if you're always flying Southwest Airlines, if you are into real estate, if you love Uber or Lyft, right? Put some money into those companies. They're pretty solid companies, even though they're very young, they're risky, they're volatile. But you have a much better chance of succeeding if you get started today than if you wait and wait and wait and never get in. Most people wait forever and they never get in. So focus on your competency. If you're in tech, find tech stocks that you understand. If you're in the restaurant industry, there are definitely restaurant companies out here that you can invest in. So there's something for everybody. Don't try to do what everyone else is doing. I understand tech and I am a vegan. So I'm investing in things like Uber and Cloudflare and Upwork and Tattoo Chef. So that's what I'm doing, Tesla, right? So don't listen to anybody else. Just find what you believe in, what you understand. Get $100, get 200, 500, whatever you can afford that you don't need right now for the next 2 years, 3 years, 5 years, 10 years. Put it into the market and put it into companies that you believe in and let it work for you. As you sleep, your net worth will be increasing and you won't have to do anything more than that. Just watch the news and make sure that your company is not doing anything that you don't agree with or that you think is bad, and you'll be fine. So I hope that this has been informative for you and at least inspiring for you. Hopefully it galvanizes you to just hop into the market. For me, I didn't start investing until last year, and I invested in companies that people thought were going bankrupt in a few weeks or a few months. Like Tesla, people thought Tesla was gonna go bankrupt last summer, but I put thousands of dollars into Tesla, and that was when Tesla was at $198. Now they're at more than $1,400 per share. So you have to have conviction behind what you're doing. If you find companies that you believe in and that you understand, stick by it. If everyone's saying, hey, this company's gonna go bankrupt, look into it, figure out what's going on. And then if you disagree with their assessment, make your own choice. And if the assessment is good, then it makes sense to buy. If it's not good, then maybe stay out of it and find another company. So same thing with Upwork. Last fall, Upwork was down to $8 per share because they had a restructuring. So people were afraid that they were losing money. I said, okay, what's going on here? I looked into the company and I saw that the company is going through a restructure, which normally results in less income, less sales, because they're busy figuring out their new business model, new business structure. So I understood that, hey, this is not a fundamental issue of the company. They are just restructuring and will be better after that. And lo and behold, I bought them at $8. Today they're at 14.8, which is a huge come up. and I'm gonna hold this company for years. I believe in this company, so I'm gonna hold them, and they're gonna go up and down, but eventually they're going to be way higher than what I bought them for. That's what I believe. So I stick by it. One of the most famous quotes out there, I believe, is by Warren Buffett, is be fearful when others are greedy, and be greedy when others are fearful. So in a recession, it's the best time to buy. Everything is distressed. Everything's up for sale. Just like when you want to buy a new merchandise, if you want to buy new sneakers or a new dress, you're looking for sales, right? You wait, you set alerts, and you say, hey, when this goes on sale, let me know. And when it goes on sale, what do? Do you run away? Do you say, oh, I'm afraid I'm not going to buy that because no one wants to buy or because it's too cheap? No, you say, oh, there's a deal. This is great. I'm going to buy this deal. That's how you should treat the stock market. People are going to be afraid because they're acting on emotions and sell their stocks when things look a little bad. But you have to look deeper and figure out what's actually going on and then buy if it makes sense to buy. And in most cases, if the company you're looking into hasn't done anything fundamentally different, that means that they are still going to make the same amount of money when things turn around. Like I said before with Southwest Airlines, nothing has fundamentally changed about this business. They have enough cash to survive for 2 years. So there's no reason for me to sell the stock. I actually bought more, and it's actually gone up since I bought. I'm sure it's going to go back down a little bit more when this second wave comes in the winter, but for the future, for the next year or 2 or 3 years, it's going to go back up. So I'm going to hold. I'm going to buy. When it's a red day, I buy more. I love seeing red on the stock market. Every morning when I wake up, I check if it's red, and I say, okay, how much money do I have to put on this market? Of course, I need to make sure I have enough in my emergency fund. But if I have extra money laying around, it's a shopping day for me. You have to set your mentality. When everyone else is fearful, you have to look deeper and be greedy. And when everyone is greedy, when things are hyped, like Tesla is way overpriced right now. So I'm not buying it right now because people are acting on hype. There's FOMO, fear of missing out. So everyone's piling on to Tesla. It's not worth $1,400 per share yet. The company can't be worth more than Toyota when they're producing fractions of what Toyota produces every year and delivering to customers. So of course I believe in Tesla. They're a great company. They're going to do very well. Eventually they will be the biggest. They will be the biggest and most valuable company sustainably and fundamentally. But that's not now, right? Because I looked into it. So you have to do the same thing. So thank you for watching this video. I hope it's helped. I hope that you will jump into the market and get started. You don't need too much money. Just some money that you have sitting around that you don't need for your rent and that you don't need for the next 3 to 6 months or a year or two, put it into the market. And if you want to get started, I of course have a free link for you to get a free stock from Robinhood when you sign up. And it could be Facebook, Microsoft, Visa, or some other stock, but it's free. It's free money. And if that stock goes up, great. If it goes down, doesn't matter. You didn't pay anything for it. It's free, right? If you want that free stock, click the link in the description below. Sign up for Robinhood and get started. And once you get started, keep going. Don't give up. Be patient. People in this country who are wealthy, they do it not through savings account. They don't save their way to wealth. You can't do that. You have to buy assets, stocks, real estate, bonds, other assets that produce money for you in your sleep. So get started and get the free stock below. Thank you. Have a good day.